You're listening to Accounted For, the Canadian podcast that explores the intangibles of every career. I'm your host, Daniel Lee. Hello, my valued listeners. Happy Wednesday to you all. Before I introduce today's guest, I wanted to ask you, my fabulous listener base and fans, to help support the podcast by rating the podcast on iTunes by giving it 5 stars. This helps a lot with getting the podcast rise in the rankings, and it really increases its outreach, so I can help more young professionals gain a broader perspective on their career journeys, so they can be more creative. And if you leave a review with the rating on iTunes, I will also give you a shout out in the next episode, or maybe if not directly the next, in the future episode as well. Okay, so today's interview is with a really great friend of mine, Greg Duggan. Greg is currently the vice president at Alignvest Management Corporation, and the company itself is an investment management firm, and he is in the private capital group, aka it's a private equity team there. Greg has what I consider to be the poster child resume for someone in private equity, where he started his journey in investment banking and Morgan Stanley and Credit Suisse, and then he went on to do private equity at the Canadian giant Onex Corporation, and then he went on to get his MBA from Harvard Business School before joining Alignvest. So it's very well decorated with all the names that anyone in finance will know. I've known Greg throughout his journey, and as we get deeper into his story, we showcase how it honestly was anything but linear. Like, it just looks so well planned out, but the realities are that it isn't. And this is part 1 of a 2-part series where we were just having so much fun chatting that we decided to chat for a full 3 hours, and so we decided to split into 2 different parts. And so in part 1, we dig into his career journey and the various decisions and obstacles he faced in each transition that creates the current illusion of the linear career path in private equity. So without further ado, here is my conversation with Greg Duggan. Hi everyone, welcome back to Accounted For. Today on the podcast I have Greg Duggan. Hey Greg, thanks for coming on the podcast.
Thanks for having me, Dan.
Greg is the vice president at Alignvest Private Capital. And just to start off with, Greg, can you explain to the audience what Alignvest does? And just given what I know of private equity, I know a lot of people do get confused with what it actually is like. So maybe try to explain it as if you're talking to a 5-year-old.
I will do my best. I'm still trying to figure out what Alignvest does as well at a broader level. So let me start by saying I work in the private capital group, and so to your point, that is very much like private equity, although we invest across a number of different funds. I would say we have our own balance sheet capital. We have public market vehicles known as SPACs, Special Purpose Acquisition Corporations, also known as blank shell companies, and we have traditional, private equity LPGP style investing. But let me step back and say at a higher level, like Alignvest Management Corporation, our goal, very simply, is to make money for other people. Right, and what we're trying to do is we're trying to invest the capital, our own capital, and the capital of others, such that they can meet whatever objectives they're trying to achieve. So, if you think about individuals have savings objectives, whether that's lifestyle based or retirement based. Corporations and limited partners, so those institutional companies that give us money to manage, also have similar types of obligations that they're trying to manage. So best example I can give is think of a pension plan that has very long dated liabilities and has a certain amount of assets today that it needs to grow in order to meet those liabilities. They turn to alternative investment managers like ourselves to deliver returns that are above and beyond what they could achieve, in other more traditional avenues. So think, stocks and bonds, for example. And so I would say that's the big mission of Alignvest, right? So we are an investment firm, and we do that in a number of different ways. One of those ways is on the private capital side, which is where I work. Another one of those ways is on our public market side. So we have a hedge fund, kind of a true North American, long short, i.e. we invest in or sell short stocks. And we also have like an institutional portfolio money management business. So you could think about it as an outsourced CIO function. So I'll finish this and I'll go back and try to explain it. An outsourced CIO function for pension plans and endowments and investors, kind of like those investors I was talking about previously, who don't have the sophistication of some of Canada's largest investors. And so, if you think about CPPIB, so Canada Pension Plan, or Ontario Teachers, or OMERS, they are all very sophisticated investors. There are a lot of smaller endowments and smaller pensions that don't have those capabilities, but still need to meet those obligations that they all have. And so one portion of Alignvest is focused on providing services to that segment of the market.
Gotcha. All right, and so the private capital side is mainly just private, like bread and butter private equity? Is that where the SPAC also gets involved?
Yeah, so it's not bread and butter private equity. I think very traditional private equity is, you go and buy a business, you underwrite your case, and you hold it for 5-10 years typically, and you try to create value through a couple of levers, right? It's either operational value, which is the trend today, because the other component, which is financial value, is commonplace, right? And so essentially, if you think about how you make money in private equity, you can either grow the business, and I'll use kind of operating profit as that metric. You can either grow operating profit, you can leverage the business so that you minimize how much you have to invest and pay down debt over time, or you can just take cash out of the business. Like, those are kind of the three big buckets, that from where you can generate a return. And so I would say we do that. The SPAC is different. The SPAC is where you would raise money up front. In our case, we have kind of a hybrid structure where we have kind of this committed capital up front, so traditional true private equity as well as public market investors' capital. So you're tapping a different capital base than for traditional private equity. And the goal is to find an investment, so very much a similar sourcing and diligence and execution process as you would through traditional private equity. But when you actually consummate the transaction, the company is public. It isn't private. Mm-hmm. And that's an interesting distinction, because I would say one of the things that you can do in a private context is you can have, a challenged business and actually turn it around and bring it back to market after your 5 to 10 year hold period. And that's okay, because nobody is seeing, how the sausage is made and how operating profit is plummeting over time as you're making these, big changes within organizations. Unfortunately, I think in the public markets, it's much harder to do that. And so the type of business we look for as a result is slightly different.
Yeah, I think when I was first learning about SPACs, it was a foreign concept, because I think it's not as widely known and taught. And so I first noticed was a ticker symbol, affiliated with the actual fund. And so
Yeah.
my initial thought was, does this mean I can invest in a private equity fund
Yeah.
as a public investor?
Mm-hmm. And so that is true. So I think for the most part we target institutional investors out of the gate, and our investor base, is focused on the Manulifes and the GMOs and the large long-term institutional investors of the world. But because it is publicly traded, I would say individual investors can invest. Obviously, the stock right now is not very liquid, and so it's tough to build a big position. But if you think about just putting in $10 and buying a single share at this point of AQY, you could do that.
Mm-hmm, mm-hmm. And that it replicates what private equity is, which is highly illiquid when you're first going into a fund anyways.
That is true.
Yeah, so it might actually help some investors stay away from moving too much.
Right, especially before we found a deal, right?
Right, exactly. Obviously, this is not some investing advice podcast, so listeners, just trust your own judgment. This is just, conversation. I was actually thinking back in terms of how did I first meet Greg and how long have we known each other? And so we first met at a gym, Adelaide Club, and I realized that was 5 years ago.
That's right.
Yeah, about 5 years ago when I was actually on my co-op placements, and so we've had a relatively long relationship. And I think the big learning for me out of that is just people always say, "Oh, you got to go to a golf course to meet cool people or business people." And man, I've made all my business and networking connections at the gym. So
that's just because the gym is right downtown.
Yeah, and I think that's a neat place to go. You just got to go to a nice high-end gym and you meet like pretty cool people. And so throughout that time, I've seen your career evolve. And I think when I first met you, you were either just leaving your investment banking job or you were still at the tail end of it. And so, if I were to pull out your career, you started out in Queens,
mm-hmm.
and then you had a couple finance internships at KPMG, Morgan Stanley, and then you went to Credit Suisse, investment banking, then you went to Onex for private equity, then you went to Harvard Business School, and now you're at Alignvest. So
mm-hmm.
kind of the, I would say it's quite the poster child resume for finance.
It sounds so good when you put it that way.
I know, right? Well, I think from the exterior looking in, it's like, wow, you've kind of hit all the check marks there. But take you back to kind of your earlier parts, like, it's when you were younger, and I know you're from the West Coast, like
mm-hmm.
me as well. And so from that kind of childhood, was finance like a big part of your life? Did you always want to continue to go down this path?
No, it wasn't. And I'll go back to my comment, which is, it sounds so good. It sounds very engineered when you look at it backwards. And actually, I would say for most people, they can draw a fairly linear path throughout their careers. I mean, the reality is, as you know, and as most people who are listening know, is it is anything but linear, and you're stumbling into walls here and there and having to figure it out. And so, no, I mean, to answer your question, I had no idea, what finance was until I went to Queens, and it wasn't until my second year where I actually took a finance course and started to understand some of the concepts. If I think back to my time growing up in Vancouver, I think the only exposure I had to anything that was business related was my dad, who was an actuary kind of by training, but ended up going into kind of consulting for Towers Parent at the time. So, kind of a pension consultant and an insurance consultant. And I think the only reason that I ended up having a chance in this industry is because he was, very mathematically oriented. And so that kind of, I saw that in him, and I obviously wanted to be a little bit like him at least. And it pushed me to, like math, like numbers, like data. And I took my first economics course when I was in grade 11, and I think I fell in love with, that piece of business analysis and finance. And so I think from there on, it was pretty clear that I wanted to do something in business, and that it was going to be, my undergrad or college experience was going to be more interesting if it was in a commerce program than kind of an applied science or mathematics program. And so I went to Queens, right? And I think it was from there that I figured out, what I wanted to do, and kind of everything evolved from there. But even when I was at Queens, right, you mentioned it. I mean, my first summer, I worked at an accounting firm, a small one in Vancouver. My second summer, I ended up working at KPMG in their advisory business, and it was a progression, right? It's not as though I knew from the time I was 16 that I wanted to go into investment banking. I didn't know what investment banking was until 4 years later.
Mm-hmm, mm-hmm. Yeah, and in leaving investment banking, I think a lot of my friends who are currently bankers, they are at the period where you've done your 2 years and now you decide, do you want to stay on as an associate, or you go into private equity or corporate development. That seems to be the common options. And I think some have the misconception that if you do banking, then you're kind of guaranteed a shoe-in into private equity. Was that the case for you when you were going into Onex? How was that journey like?
Well, so I'll try and tackle this a couple different ways.
Yeah.
So the obvious answer is you aren't guaranteed a spot anywhere at any point in life. And so no, I think most people who go into investment banking, who want to go into private equity, will have to work really hard to make that happen. And not only work really hard, but also, get blessed by luck some point along their way, like I was, no doubt about it. I will say, though, if you want to go into investing, or if you are just broadly interested in finance, I think investment banking is actually a wonderful training ground. I think a lot of people have bad experiences in investment banking, and that's why you see the attrition rate that you do, right? And to your point, whether it's 3 years out or 5 years out, at the different kind of early stage inflection points in your investment banking career, as you're a third year analyst going on to an associate, or kind of your second or third year associate almost going to be a VP. You ask yourselves, like, do I want to do this for the rest of my life? And I think most people don't, and the reason that most people don't is because you're working incredibly long hours, and you don't have much of a social life, and over time, I think the tendency, people may disagree with me on this one, but at least I can only speak for myself. Like, over time, I think the tendency is you start to value personal time more and more. I think it's easy to just work 100-hour work weeks when you're in your early 20s. I think I'm in my early 30s. I don't know that I want to be doing that now, unless it really mattered, right? And so going back to your original question, no, you're not guaranteed a spot in private equity. It is, I still think it is the most logical path to take if you want to go into the private equity space, or the investing space more broadly. So whether that's, the private side or the public side, broadly speaking, the buy side. And if I think about how it worked for me, well, I actually, again, this is going back to the theme of not being sure what I've wanted to do for the better part of my life. I didn't really know what private equity was when I went into investment banking. I didn't really know what private equity was, kind of a month until I had to go and interview at Onex. And in fact, I only interviewed at one spot, right? I only interviewed at Onex, and was fortunate enough, for whatever reason, to con somebody into giving me a job there. And so I think the reason it worked for me, and this is going back to the luck component, is one, in my year, Onex hired a huge associate class, right? So I think typically they hire 4 folks every year from investment banking, and they've changed their titles now, so I don't know that what I'm saying matches up perfectly with what's on their website. But anyways, they would hire 4 folks from investment banking a year. In my year, they hired 9. So obviously, probability was in my favor. And I was also fortunate that I could talk about some experience that I had in banking that was actually relevant, right? So actual deal experience where you had to analyze something or form an opinion on something and take active leading roles. And I think one of the pitfalls I see a lot of people in banking do is they are working these 100-hour work weeks, and it's very hard at the end of a 100-hour work week to step back and think, what did I actually do? Like, what is the purpose of what I'm doing? And if you do step back and think about that, what it allows you to do is have an insightful conversation about the importance of what you're doing to somebody else who hasn't seen it firsthand. And so the more stories you can tell about your experience and about the value that you've gained from your experience and what you can provide to, in this case, Onex or another private equity firm that you'd be interviewing at, the higher your chances of getting a job. And so, I think I was able to do that. I think I was able to, parlay my 2 years of, well, at the time it was a year of investment banking experience into, kind of a 2.5-year stint at Onex.
Mm-hmm. And I think a lot of people, when they now transition off from being an agent on the sell side, so that's investment banking, sales and trading, equity research, into finally the buy side, when you call it the holy grail, and they always think it's greener on the other side. And some have the notion that, okay, done are the 100-hour work weeks and all that, and now I get to be an investor. But when you made your transition, I remember I noticed how you lost more weight going into Onex, and you I think ended up having even longer hours than you actually did in investment banking. Now, I think the caveat is that for those who are not familiar, Onex is probably one of the largest non-pension fund private equity firms in Canada. It's a public company, but it definitely has a huge prestige in the private equity market in Canada. And it might have been the context of the size of the company that resulted in you working longer hours than you did in banking. But what kind of expectations did you have going into it, and what was the reality? Like, how did it differ?
I think I went in eyes wide open, so I don't think there was a big delta between what I thought it was going to be like and what it ended up being like. Look, I think that's right. I think there are private equity firms where you work as much, if not more, than how much you work in investment banking. My time in Onex was, there's no doubt it was worse from an hours perspective and from a stress perspective than my time at CS. I would say that's for both good and bad reasons, right? So good reasons why that's the case is because what you're doing feels more important. And there's real dollars at stake, and as a result of that, there's more pressure. And so, it's one thing to mindlessly work 100-hour weeks. It's very different when you actually, are very focused for those 100 hours and very concerned about what you're doing. Not that you're not when you're in banking, but it is just a different level of thought. And thinking, for me, is tiring. And so I think that's the good piece, right? I think exposure to that is good, especially early on in your career when you have real responsibility and have to pass judgment. I was going to say make decisions, but it's more provide your opinion as consensus is formed within that firm. The bad side is if the work that you're doing is driven by cultural norms that you don't agree with. And I'm not saying that Onex was a bad place to work. I do think there's a culture there of working really hard, and so which is fine, but that helps explain kind of why it was so much worse than my time in banking. Mm-hmm. The flip side is I think I learned more there than in 5 or 6 years that I would have learned being at CS. And already at CS, you're learning a lot more than you would anywhere else because you're working twice as much, right? So a year in banking is, call it 2 years anywhere else. And so if you think about the multipliers, that means that the 2.5 years I did in Onex were like 16 years anywhere else.
I think that could be a very good selling point for anyone who's highly intellectually curious and just wants to learn a ton. And I think I can definitely relate in terms of my experience in like the public side, the buy side. I don't think I would have learned as quickly or as much if I had stayed in consulting or accounting. Like obviously, like I'm practically mirroring you in this comment in terms of you do learn a lot. You learn a lot. Like when I first met you when I was in accounting, I was working 100-hour weeks, and so your first pitch to me was, aren't you used to banking? You're going to make 3 times as much and work the same amount of hours. But I think, like there's something about just being in the buy side where it might be because we're the principal now and like your money's on the line and every decision you make actually has some huge kind of ramifications if you're wrong or right. But yeah, the learning was completely insurmountable. Like I've never spoken to so many CEOs in my entire career before I had joined Maurer out in Calgary. Like, consultants talk about, we get to advise CEOs and you get to be on a call with the CEO, but man, like I talk to like 60 CEOs a week, for example, and you don't get that. And,
let me ask you this question. It would be interesting to get your take on it, is how much more reading did you do at Maurer relative to when you were in consulting? How much more consuming versus the production of information, right? Like just splitting those two, the production versus consumption of information.
Mm-hmm. I think to answer that question, I would definitely say way more consuming. But I think even if I think about the process, if the full process of what you do as a knowledge worker is you learn, you think, and then you execute. I think in consulting, I would say about 70% of my time is more executing. Mm-hmm. So you're building decks, building spreadsheets, and maybe you get about 20% of the time to think and 10% to learn. And it's still valuable learning, but I didn't get as much time. Mm-hmm. And I think that's the thing where you're constantly in a crunch of time, and so you're more focused on executing things. Whereas, when I was more, I would say easily 40-50% of the time was on learning, just reading nonstop, talking to people nonstop, and then another 30%, 40% just thinking, mm-hmm. and then the rest 10%, 20% is executing. That's just compiling all this shit you learned and thought about, and then just writing it up in a concise manner. Mm-hmm. But thinking was a huge part. You just sit there, stare out into empty space, think, and just scribble in your notepad for hours on end. And for people that love doing that kind of stuff, I think it's definitely one of the more ideal kind of career spots. Okay, so you did your stint at Onex, and then you go into another poster child of careers, which is an MBA in Harvard Business School. Obviously, from a consulting background, all my friends always talk about it. You can't be in a management consulting job without having talked about an MBA once in your first 3 months. Mm-hmm. And so everyone talks about doing an MBA, but I think a lot of people, I advise my friends on whether they should do an MBA or not, based on my analysis, and most of them shouldn't really be doing an MBA, in my opinion. What was your thought process? Why did you want to go do an MBA?
I would love to hear your analysis, but I'll answer the question first.
Yes, yeah.
So I've got to go back to my time at Onex. So I think I mentioned at some point that one of the reasons why I was able to get a job there, I think, was the fact that they had hired a larger associate class, mm-hmm. right? And so that's great for getting a job. It's always concerning when you have more competition, right? Which it is what it is. And so the way that Onex worked was, you came in for a 2-year associate program, and it wasn't guaranteed that you could stay on beyond that. And so I remember, in my first 6 months, I think out of the 9 of us who were there, I think 3 people, not me, were told, hey, you can stick around as a senior associate. And I was told, hey, you're not there. We're not sure. You should start thinking about what you can do after Onex. And so I think when you get that news, there's 2 reactions. One is, I got to figure something out, and the other one is they're wrong, right? I think there's this natural kind of confrontation with that, and so obviously what that did was it led me to go and say, okay, well, what can I do? So I thought about doing an MBA. This was the initial spark, right? And then obviously the other part of me was, well, if I keep working hard, if I put my head down, if I demonstrate that I can actually think like an investment professional, maybe they'll change their decision, which is something they had said they could do. It wasn't a definitive answer. It was simply, here's where you are after 6 months. So a good check-in and a swift kick in the pants. And this is a slight segue, but there is a very big distinction. I think we've alluded to it, but we haven't hit it on the head, between the way that you think as an investment professional and the way that you think as somebody that is not an investment professional. In this case, somebody that's on the sell side, right? And I will say, in hindsight, what I lacked was thoughtfulness. Honestly, like true thoughtfulness in the work that I did, because I think in banking it was just get something on a page and get it out, and B, the confidence to express that thoughtfulness. And so this is a long segue, but it'll tie in later on. And so with that information, I did those 2 things, right? I started exploring, and I started putting my head down and trying to figure out what I was going to, how I was going to impress these folks. Ultimately, what happened was when I was thinking about business school, which is what people had recommended, because a lot of folks who I was working with had done an MBA, I was thinking of 2 schools, right? I think for folks who were in my shoes, or who are going to be in my shoes, there's little value in doing kind of a Canadian MBA, especially if you have a Canadian undergrad degree. And I think, and I can talk about why I did an MBA and the value of an MBA, but there are a handful of reasons why you do that. And I think the U.S. schools and some European schools, to be fair, are really, heads and shoulders above the rest. If you think about like tried and true, tested MBA programs. So I was looking at Stanford and Harvard principally, and at the same time was working a lot harder at Onex. And so what ended up happening was, because the MBA is such a long-tailed, the MBA application process is so long-tailed, you start it a year in advance, and then you kind of, do it along the way, and you compile everything that you need to apply. And then you find out, kind of a year later, which actually coincided with an interesting turn of events at Onex, which was, when they had told 6 of the 9 of us, I think my math is right, 6 of the 9 of us that, you guys have to think about something else. I think 4 of the 6 just left, which was an unintended HR consequence that they really didn't think through. And in fact, they left and went on to do fantastic things. So what that left my associate class with was a bunch of folks. A reduced number of folks and staffing needs at Onex. And so I like to think it's because I was able to actually demonstrate thoughtfulness, but ultimately it ended up working out, right? So I could have stuck around for another year as a senior associate. And then again, you have to figure out if they want to keep you around as, I think at the time it was a director. So I had that option. And at the same time though, because of this long-tailed process, I wanted to see it through, and I ended up getting accepted to HBS. Stanford rejected me outright, and so I was faced with this wonderful conundrum, which is, do I stay here and keep doing this investment role, or do I go and spend 2 years in Cambridge, Massachusetts, obviously, and go to HBS. And I ended up choosing going to HBS, and my thought process was, I've already done the buy side experience. This is the only chance I'll ever get to go to an extremely prestigious school, and again, right? Like it's a blessing just to have the opportunity to do that. And so there was and I can talk about the elements of luck that went into that as well. But for me, it was, I'd like to spend some time trying to figure out what I want to do with my life. I think I like what I'm doing now, but I've had a fairly sheltered and focused 4-year career path so far. Maybe there's something else out there that I just don't even know exists that I can go and explore. So I went and did an MBA for a couple of reasons. One was I wanted a break. 2 was it was a good program. 3 was I wanted to figure out what to do with my life. And 4, which I thought about at the time but underestimated the value of, was I wanted to go and meet people that I didn't have a chance to meet in the Toronto finance bubble. And so that was really, for me, what kind of spurred that decision. I obviously ran, the very traditional finance professional cost-benefit analysis, and quickly realized that it's impossible. It's actually, the math is impossible because you don't know enough variables to solve, right? You know the cost, which is staggering, and you know the short-term benefits, which are not that high relative to what you were doing before you went to business school, because as we know, I'm doing something similar anyways, and I could have been doing what I'm doing now without going to business school, so why did you do it? It's much more about the personal journey, right? And I'm happy to talk about this, right? I think about it as significant optionality, and really an insurance policy. And so pricing those in the context of somebody's life is almost impossible. And so I just did it.
Mm-hmm. And continuing on that trail of, like you had your particular 4 reasons about going into HBS, and I think those were your reasons of why you went to HBS. And like you said, the short-term benefits aren't that great. What was the big learning, though, when you came out of HBS? Now, when you look in hindsight, you had these 4 reasons, and when you came out, what was like the big difference you realized where, I expected this, but this just didn't pan out the way I thought it would?
So I'm going to try and tie pieces of the story together. So I think if when we were talking before the break, when we were talking about some of the feedback that I'd gotten early on at Onex, I linked it to the confidence to express thought, right? And what I think HBS did that I didn't actually fully appreciate was provide me with confidence. And it's very hard to actually express how important this is when you're talking to somebody, because it's really very personal, and you can only evaluate yourself, right, relative to who you were prior to going and doing this program. But for those who don't know, right, HBS is based on the case method. And so the case method is, before every class, for every discipline, which I can quibble about whether or not it's a good idea, but even for an accounting class, for example, you have to read a case, and with that case, you have to come prepared to class to discuss it. And so what you end up having is, a room of 90 people, where you have to have the confidence to express opinion and thought in front of those 90 people. You individually. And so, you do that for 2 years, and you get very good at quickly forming a view. Even if it's not fully thought out, you can quickly form a view or an opinion and express it publicly. And that for me, prior to doing this, was a very hard skill. So I think, if I were to say, like, that is one very defined thing that I can point to. The other one, the other ones, broadly speaking, were just kind of actualizations of the things I thought HBS would provide me. And so, was it a 2-year break? Absolutely. Was it a well-deserved and needed break? Yes. And so, is it great to go back to school when, or for me, was it great to go back to school when I was 26, and meet new people from different walks of life and actually get to experience living in a new country, a new city? I loved it. I loved that the adventure component of it. And you know what? I think a lot of people will say, why would you need to go do an MBA, especially if you've done a commerce undergrad degree? What I would say is, there's a lot of stuff to learn out there, and I can actually say with, a bit of surprise, I ended up taking away more from the classroom than I thought I would, right? I think there was some arrogance in me that said, I know everything there is to know about the theoretical side of finance or, the classroom-based aspects of accounting. Why would I want to go back to school? Like, that's just not true. If I went back today, I'm sure that I could, even after having done it, I'm sure that I could still pick stuff up. And so what I would say is don't discount, the academic learning component of an MBA program. And then, the third piece is meeting these people, right? And so you meet incredible people. You meet, some of my favorite folks were obviously the guys who had been in the military. I think we in Canada don't have nearly the same emphasis on the military that they do in the U.S. And so my class at HBS had a significant portion of people who had either been in the Army, the Marines, the Navy, or the Air Force, and they are incredible people. I mean, these are very bright, clearly because they're individuals who, for some unknown reason to me, but very clear reason to them, decided to sacrifice a significant amount of their lives for a cause that is higher than them. And so I think that interaction for me left a lasting mark. And I loved hearing about their experiences. And when you think about your worst day at the office and their worst day at the office, it's quite humbling, actually. My worst day is my computer froze and I lost my model. Their worst day is, my tank blew up and I hit an IED. And it's funny to say that, when you're having a conversation, but when you actually dig into that, like, it just puts things into perspective. And so I think I walked away from that experience, broadly speaking, just a much more well-rounded, balanced human being. And at the end of the day, like, I think that matters a lot. And so, yes, obviously, could I have gotten the job I had when I first left HBS directly from Onex? Probably. In fact, certainly. But I guess the question I can't answer is, would I be as good at my job? And I'm not saying I'm great at my job, but would I be as proficient at my job as I am today, having not had that experience? I think the answer is no. And so I think that's why I did it. And I'm happy to explore the other, like I think I talked about having this optionality or this insurance policy. I'm happy to dive into that. But really, I think, what I just talked about is kind of the most impactful.
Mm-hmm, mm-hmm. Yeah, and I think that confidence factor is something my friends and colleagues also talked about as well, where for one individual, that person, like, I constantly grilled them on, why do you need to do an MBA? Why do you want this MBA? Why do you want to go to the top 7 MBAs? Like, they call it the Magic 7 MBA schools, and Harvard and Stanford are definitely one of the 7 schools that are listed. And for that person, it was confidence. That person just did not believe that their career was that meaningful without having done this MBA. They felt like a fraud, and they felt that doing an MBA would allow them to be confident in themselves. And so, yeah, I can definitely see how that can influence, that can help that person and any individual that lacks that kind of, I guess, self-acceptance, go through that kind of journey. Although I think I told you about how for most people I don't think the MBA is the right path, and I think there are many factors. Like, I quiz my friends on whenever they tell me they want to do an MBA, and obviously, like any finance professional, we go through the cost benefit stuff and you build up the model of the financials, and yeah, it's not it's not a cheap thing to do, and I think many people will go into severe debt to go through an MBA of that kind of nature, where it's a high performing school, whether it's in the U.S. or Europe. It'll cost like $250,000 all in, like over a 2-year period.
U.S.
U.S. dollars. And yeah, like I asked them, okay, what are you trying to do it for? Like, what is your intent? What is your purpose? And many of them are doing it to run away from something. It's like they don't like what they're doing now, or they just don't know what they want to do with their lives. Mm-hmm. And so they just go do an MBA in the hopes that I'm just going to learn, like, it's just going to come to me. Mm-hmm. What I want to do will just come and hit me like, the good graces of, God or something, and say, oh, this is what I'm meant to do. And they'll just come out of that okay. And I think the realities of the MBA, like when I've spoken to other people that go through these top MBA schools, is that's not really the case. Most people, I think, tend to go in with a certain kind of purpose and intent of what the MBA is for, and they come out of it sometimes very pleasantly surprised, and sometimes kind of more coming out of it at least having earned what they expected to get. And I think that's the gamble, where a lot of people just try to do it with that kind of gamble in mind, that I'm going to do this and I'll probably get a job in consulting or banking, but they don't even know what that is. They haven't researched ahead of time if that's what they want to do. They don't really have a thought of what they hope to even gain out of an MBA, and they just want to do it just purely for the branding. And yeah, that can be the insurance policy and the optionality that you get, but I think if you really want to get that expensive an insurance policy, you could get it in other different ways. I think it's more the insurance policy, and the optionality is more, like you said, like you alluded to, the side benefits, like the cherry on top of what you actually want to get out of that kind of program. Like for me, for example, when I was trying to get into the buy side, I always thought one of my options was to do an MBA to get into the buy side, and I was very zeroed in on that. I was like, Columbia Business School, they have the top value investing program in the States, or even in North America in general. And so if I don't get into a buy side firm by the end of this year, I'm going to apply to that. So it was very focused, and I knew exactly what school I wanted to for that specific purpose. But I think not a lot of people have that kind of thought into why this school, why you want to take 2 years off to do X, Y, and Z. And I think, like you alluded to, introspection is a full-time thing. You really have to take a lot of time to do it, and that's what I've been doing over the past 6 months. And not a lot of people want to take the time off to do that. They need to be kind of having one foot in something else, like a school, getting a degree, whilst doing this introspection. And so I think that could potentially be a way for them to do that. But I question them constantly on, is that the true purpose of what you're trying to do here? And I think when they can't come up with an answer to that, then we have to start asking the question of, is this then the right move for you?
Yeah, it's an interesting. There's no right or wrong answer here, and so
100%. Yeah.
My take might be slightly different, and I don't know if we talked about this before we started recording the podcast or if it was after, but there is, I think I mentioned, I'm hoping that, inspiration strikes me and I don't have to work for it. And that is, as it relates to just, figuring out my life, which I'm obviously still in the process of figuring out. And I take your point, which is I think that's a naive way of thinking about how life unfolds, right? I think there is real value in being, mission and purpose driven, and owning, what happens next in one's life. I will say there is, I think, this is for me, real value in serendipity and in introspection within, a framework like an MBA program, where you're amongst a whole bunch of people who are trying to figure out the same thing. And there's this exchange of ideas and this exploratory process that happens both organically and in a prescribed manner by the MBA program that helps you explore things that I would argue you wouldn't explore if you just introspected by yourself. And I can think about a number of things I did that I would have never thought of doing had I not done the program, right? And had that kind of realization. There's a great example where over my summer in between my first and second years, I spent 6 weeks driving across the continental United States. So from Detroit to Cincinnati to Denver. So literally right through Kansas, I think. Into Colorado, Denver, and then up to Butte, Montana, to do small business consulting for nonprofits. Something that I ended up, enjoying a lot. And I also explored, small business opportunities by working at a search fund. Right, I actually worked at an oil recycling plant in Cobourg, Ontario. I took the Via train up there every kind of second or third day, and spent some time with folks who had bought that plant, and got to do these things that I would have never thought of doing from an experiential perspective. Well, that I think from an experiential perspective were really additive to who I am. And so I take your point. I think it is helpful to have a plan, and to go into these programs, knowing more or less what you'd like to get out of it. But I would say it is okay to go into these programs knowing that what you want to get out of it is a period of introspection and a period of time where you can go and try and figure out what you want to do. And so I think that's the bridge.
Mm-hmm. I agree. I 100% agree in that. I think obviously it depends on each individual, but I think, if you go into such programs with that mindset of, I want to take the time to learn more about me and actually go through that journey of self-realization, I think it can be immensely valuable. And I think the serendipity you talked about, where you're in a social group and so you just don't know what you might get. And I think a lot of the positives from that would be irreplicable. And I think the caveat, obviously, to the other side is some people might fall to groupthink, where I think the thing I allude to when I challenge people, like my friends, is when you're in business school, a lot of your friends go, you either do consulting, finance, or accounting. You don't really think about why you want to do consulting, finance, or accounting. Maybe you do, but usually people pick finance because you make a lot of money, or people say you make a lot of money and you'll be retired by 35. And they just go gung-ho into that. Mm-hmm. That was the case for me. Like when I did accounting, it was no questions. Everyone just said, you got to go into the Big Four, you got to do accounting, and you're going to be set for life. And I said, all right, I'm not going to question any of that. I'm just going to do that. Mm-hmm. And then you learn later on. And I think, if you've, like, from your journey when you talked about it, you do learn a lot about yourself and a lot about the actual field that you're in. And then when you go into an MBA, you can say, okay, I think I got to take some time to learn more about me, mm-hmm. and how life should work for me. But I think some people, when they go into the different reasons, they might succumb to groupthink again. And I guess I have a fear that many will succumb to that groupthink when they see 30% exit to investment banking, 30% exit to consulting.
You're not wrong. There is a great stat, and so I will say, you have to. My recommendation is, you should go into these programs with the right mindset. I think that's what you're driving at as well.
Yes.
But there is a wonderful stat, which is, if you look historically at where MBA graduates have gone from a career perspective, the timing is almost the worst that you could possibly imagine. So, they in 05, 06, and 07, everybody was going into investment banking, and then everybody got fired. In 98, 99, everybody went into tech, and everybody got smoked. I'm not predicting anything here, and I have no predictive powers. But there's a lot of that going on right now, where there's a mad rush to the valley and into smaller startups, and there's a significant proportion of folks doing that today. And I think one can question whether it's the fourth industrial revolution or arguably another bubble, and who knows, right? Who knows? But historically, timing has not been on the MBA side.
Mm-hmm. Yeah, I think I might have seen the exact same stat that you alluded to as well, and it's part of the research that you read as an investor too, into looking at how industries are shaping up. And so so you leave HBS, you've had an experience at a search fund, and you decide to go back to private equity, and like you said, this was not something you predicted would happen, but what was the realization for you then, coming out?
So it's funny. Again, I think we had this conversation on the elevator ride up. But I think there's been a mass explosion in search funds, right? And not for bad reason. If you think about the premise, it's quite sound, right? Which is for the benefit of anybody who doesn't know what a search fund is, you essentially, you're a young, hungry individual who has a couple of years of work experience plus an MBA, maybe not, who knows, and you want to run something, you want to build something, but you're not. You don't think that you are somebody who's going to come up with an idea and execute on it. What you want to do is find an established idea and run it better. And so, the search fund model is you can go find an owner of a business who is looking to exit and essentially take over, right, and inject new life into their company and hopefully grow it and make a lot of money and, be your own boss and all the wonderful things. And so there has been this, there's a class at HBS that is taught on this, in fact, in many other schools as well. There's been an explosion, right, in the US and in Canada, starting in Europe, and even starting in Asia, of folks who are looking to do this. I think there's for me, it's not that I didn't want to do it. It just wasn't, it didn't feel like the right time. I love the idea of owning something and building something myself, and there's no part of me that thinks that I won't do that one day. But I realized pretty quickly that I had a lot to learn. And I think it was thanks to my summer experience, right? I mean, it's one thing to say, I've evaluated businesses and I know how to underwrite a deal. It's a completely different thing to say, I feel confident in my ability to execute a whole bunch of legal agreements without spending millions on lawyers, right? Because you don't have those resources. Or I feel confident in my ability to actually be able to manage a business. Managing a business is hard. This was an oil recycling plant that gave me my experience, but any business is hard. You have dealing with HR, just dealing with things like making sure that you pay people on time, getting your customers, maintaining customer satisfaction, getting your suppliers to, deliver on time and with quality products, actually running a plant. Like, that is very challenging. And what I realized was I'd feel much better if I could have a couple more years of experience, kind of evaluating these components of a business. And the reality is where people would, push back on that logic is, well, you're not actually running a business today. You are only investing. And I'll say, well, I enjoy that. I mean, if I think about the part of a search fund that I really liked, it's the investing part, right? And so the concern I had was I'm actually not an operator. And if I'm going to go and, the first part of a search fund, in theory, should end very quickly. So the part I like should actually disappear. And so, I think I would have to find somebody to do it with. And we've had this conversation, and I think I'm working on making that happen. And so, I ended up going back into something that I very much enjoy. But I think having had the experience I had before going to, do my MBA, I knew what I wanted to look for, and so I was constrained, I would say, by geography, and as you know, and as I presume most of these listeners are in Toronto, but maybe not. But the Canadian finance scene is small. Like it is just small. It is small. The number of seats on the buy side in Toronto are few and far between. The number of seats in finance in general are few and far between. And so I knew very precisely what I wanted to do, which was I wanted to go be a part of an organization that was growing. So I would get to see how you build a financial firm, specifically, an asset management firm, while actually getting to make investments, which is a hard combination to find. And so, you have to, it won't be perfect, right? Because there will never be that perfect job that comes across that hits all of your criteria. But this was pretty darn good, right? This had long-term committed capital from the partnership group, so there was some semblance of stability. It wasn't just going to close up shop the next day. They were very impressive people, and I got along well with them. And the wonderful thing about my job, which I think I underestimated, but in hindsight should have been aware of, is when you are working with a smaller team, and we have a very small team, you get to do a lot more. And so all the things I didn't know how to do before, I think I have after only being there for 2 years, have a great understanding of now. So, all those legal documents or all the procedural things involved in doing a transaction, like I had never really seen that at Onex. And the reason was there were, 5 people on a deal team, and so if you were the youngest one on that team, you wouldn't be involved in anything really but kind of the financial model and kind of underwriting a business case. I think here there's really nobody helping me out from an execution perspective, and so that experience I think is although I didn't know I would be getting it, the fact that I am is really what's keeping me around, I think, and so I enjoy what I do. Mm-hmm. But I am, to our earlier conversation, still trying to figure things out.
Yeah, and I think, like you alluded to with the stretch fund model, for people that don't know, it's typically like 2 years. You get 2 years of runway to find a company and invest the money into it. And then after that search phase, you go 100% into operating that business. And like you alluded to, if it goes well, you want it to end faster than later, by having found that perfect business. And I think that distinction you made of, I'm not an operator, I'm an investor, I like investing. And I think that's important for people to realize. And I think this has been an evolution for me too, where when I first started getting into the investing world, so I got into the whole Buffett, Munger, fundamental value investing world when I was finishing up university, and that's what alluded to me joining Maurer. But I read the Buffett quote of, to be a great investor, you want to be a great businessman, and vice versa. And that's what alluded to me going into consulting, trying to learn about more businesses. And I always thought that being a great operator would make you a better investor. But I also recently heard an interview with Andy Ratcliffe of Wealthfront, and he's also one of the co-founders of Benchmark Capital, the famed venture capital firm. And he talked about how, I've been a CEO of a huge billion-dollar company and also the co-founder of a venture capital firm, and let me tell you, the skills are not really that transferable. It's completely different things, operating a company and investing in a company. And I think that's actually more so my thought process now, where I think they are very different. I think there is career capital you can build up on and you can get some insight on, but I think they're two very fundamentally different things. And I think being able to understand who you are, am I really an nitty-gritty operator or am I an investor, I think is really important. That's a journey that I've been going on through my own introspection and talking to tons of different operators of startups, and really asking myself, do I really want to handle this nitty-gritty thing? Is this really who I am? Or am I more of the person that likes to actually invest in these companies after thinking? And I think that's a very important distinction that you touched upon. I think a lot of people should consider touching upon themselves as well.
Setting aside the investment bank that he took over when it was in dire straits, how many businesses has Buffett actually operated?
Exactly.
Right?
Yeah. He's a capital allocator.
He can say that.
Yeah.
But he hasn't done it.
Yeah, exactly. And I think that's something people should really consider about too. Not to mention that we're going off a tangent, but Berkshire Hathaway is practically a private equity company.
Yeah.
Yeah. Sure, he does public equity investing, but let's be honest, most of its capital is all in the private side, and that's how Berkshire grew into what it is now.
Correct.
And so you did allude to how, in hindsight, you should have known, you going into a small team in Alignvest that you'd get all these different responsibilities. And so if we actually dug into what a private equity associate does, when I speak to my friends, when you first look into the buy side, my thought was, oh wow, maybe they get to talk to a lot of management. Maybe they, are really helping drive operational effectiveness in a company. But when I spoke to my friends, the reality was that a lot of it was very data and spreadsheet work and a lot of modeling, very not dissimilar to what you would be doing in banking when you're an associate especially. And that's why there is a synergy of it makes sense to do banking to go into private equity, because a lot of what you do will be actually very similar in terms of the modeling standpoint. What was your experience like, and how would you say it differs between Alignvest and Onex?
So my roles are different, right? And so there will be differences as a result of that. Where now there are associates helping me out, and before there wasn't, because I was the associate. But to your point, like, there's a reason why private equity firms hire out of investment banking. It's because the skills are literally directly transferable. And so as an associate, you are spending a lot of time in spreadsheets, right? And you are, again, on the production side of that information. Like, your job is to produce things for other people to consume. And so that's absolutely right. Like, there will be a lot of time spent on modeling out a business, on figuring out how you think about value, whether that's kind of fundamental or relative from a public market perspective or a private market perspective, and you're busy doing that on a daily basis. I would say it's more thoughtful than what you were doing. Going back to our prior conversation, right? More thoughtful. You have to consume a lot more information on your way to producing what you are doing, in terms of you are reading, as opposed to making sims or pitch books. You are reading those pitch books and reading analyst reports and reading consultant reports and digesting industry wide news. But at the end of the day, that is all going into building a financial model and coming out with a conclusion that is this a good or a bad investment. What I would say from my role today, I don't spend nearly as much time today, in spreadsheets as I did before. I still do, but not as much, not nearly as much. And my role today is much more around process, right? So my role today is if we think there's a good investment, how do we actually make it happen? What diligence do we need to do to make sure that the assumptions that we are underwriting hold true? It's very hard to actually diligence something 3 years out. Like, the most of what's focused on is next year's numbers. Are those going to hold true, and does that support what you're trying to underwrite? And so it's everything from a quality of earnings to the consultants that we're going to hire, to the legal due diligence that we have to do, to the tax specialists that we have to bring in, to the structuring, to the drafting and negotiation of legal agreements. Because what I think people may not realize is, you may think a business is worth X, but I presume in almost 99% of cases the seller is going to think it's worth Y, and Y is going to be greater than X, and so you have to figure out, how do we make this deal happen? What are we willing to live with? And there's a huge dance from a negotiation perspective that has to take place. And so really my job today is all about that, right? Including how do you just actually close a deal? I also do a lot more sourcing now than I did before. So sourcing is obviously kind of finding these investment opportunities. I would say in a lot of cases they come from investment bankers who act as market makers in the private space or intermediaries. But oftentimes it's from relationships and kind of your networks, which again, going back to an MBA program, why that's helpful is because that's a very quick way to grow your network and hopefully one day leverage that to actually, to some monetary, from a monetary perspective in order to do a deal. That sounds callous, but, that's one of the benefits. And so I think relative to relative to my time at Onex, right, today is much more about process and negotiation and structuring and kind of the coordination of everything that has to happen from the time you think it's a good deal to the time you actually own a business. Yeah.
And so if we were to take kind of like a day in the life of what it's like in your shoes, if I picked an arbitrary day, so let's say last Thursday, what was your can you go through like what your schedule was like without obviously revealing any of the sensitive material?
The days are a blur, so I'm not actually sure what I did on Thursday. Let me think about that. So for example, there's a company that we're really interested in making an investment in, right? And so that day was about we spoke to the chairman and the CEO and his CFO.
As in, did you take the lead on that with your team?
Yeah, and we walked through their business. And we asked them to present to us, right? So you think about a management presentation. This was done telephonically, but that's what it was. And then we went back and started doing a whole bunch of industry research. And so, do we like the trends? What does this company actually do? How would we describe it in layman's terms? What are its competitors doing? Just kind of the standard analysis, I would say. Especially from an early stage perspective. I would also say, we are always looking at numerous deals at once, and so I think on Thursday I spent a good deal of time thinking about another transaction, and I'm not the first. Not the first is not the right word, but I'm not the lead on this deal, and so there are investment memos that we prepare, and the team prepared one, and I was digesting it. So I read through kind of the 60 pages of stuff and thinking about questions that I can ask the team about, and we have our investment committee meeting tomorrow, and so having to be prepared for that. So I spent some time on Thursday doing that. That's pretty much it.
Yeah, it seems like a lot of thinking.
A lot of thinking,
a lot
right?
of reading.
Going back to what we were talking about before.
Yeah. Okay, and so I think I'd love to dig into this a little more, but I think in the interest of time, maybe we'll do a round 2 where I dig more into like what you do. But kind of going to the final rounds. I know you're an avid book reader. What's the book you're reading right now?
So I'm reading a book called Meditations by Marcus Aurelius. There's something about Stoicism that appeals to me.
Mm-hmm.
It's not a finance book, so the other finance book that's on my shelf is Big Mistakes.
Yes.
Which is a synthesis of 16 investors and kind of the worst things that they've done.
Mm-hmm.
And I agree with that. I actually think you learn a lot. This is not a surprise to you, but you learn a lot more from failure than you do from successes. And so it's great to actually see that these infallible investors, have made 1 or 2 missteps.
Mm-hmm. Mm-hmm.
It is a truism that nobody bats 1,000, right?
I think what the statistics, like even if you're a top investor, you're only wrong 6 out of the 10 times. So
right.
The 4 times that you're wrong, like that's gonna hurt.
Yeah,
just being wrong 4 times out of 10, like still 40%. It's gotta hurt.
It does,
and you gotta know that happens to everyone.
Yes, it happens to everybody.
Yeah, and that's if you're really good. Most of the times, if you're not that level, you're probably going to be wrong 8 out of 10 times.
Correct.
Which is the case for most people in the market. The Meditations book, is that a Gregory Hayes translation?
I think it is, actually.
Yeah, I think that's the most recommended one. I read it once, but I think I have to go through it again. It's one of those books where you just got to go through it multiple times and you just learn something different. Last time we spoke, you said you were trying to read 50 books in the year. Are you close to that?
No. I'm going to miss my target. I think I had to ratchet it down. I think I was shooting for 3 a month. And I might hit that. I might cheat though, because I'm going to just buy smaller books.
Well, I think it evens out, right? Because you read one long one and then it kind of evens out. That's what I tell myself.
Exactly.
Like, I read through 2 of the Tim Ferriss ones, like that are each like 400 or 500 pages.
Yes,
early in the year.
You should do it by pages.
Yeah, that's right.
That's the logical way to do it.
Exactly.
And then buy things with really big font.
Some pictures too. I think I've been trying to do two a month. And so
2 a month.
I think I'm on track at the moment. I've read 19 out of the 24 so far. So we still have 3 months left. So I think I'm on track. So hopefully I can exceed it. It's an easier goal than 50.
Yeah, I don't know. I hope one day I'll get to 50 when I have the time.
And so then for you personally, what's the book that you've gifted most then from all those books you've read?
That I've gifted?
Yeah.
Oh, geez. That's a really good question. I don't gift a lot of books.
Well, maybe you should.
I should.
Yeah.
Yeah. I think the latest book I gave, but this was I don't think this is quite the recommendation that you're hoping for, but the latest book I gave was Live Younger Next Year, which is a book about healthy living, actually.
Yeah.
And so, as the title would suggest, it's geared towards an older audience, I would say. But I did take away some really interesting things, actually, that have changed kind of the way I approach health and wellness and working out and stuff like that. So that's the latest one I gave.
Nice. And for you personally, like, I think, we're friends, but at the same time, you're older than I am, and so there's kind of like a mentor-like quality whenever I talk to you, just because I feel every 4 or 5 years I go through what you went through last time we chatted. For you personally, do you have mentors?
I wish I could say that I had like one very clearly defined person that is a mentor, but that actually isn't true, and I don't know if that's because I don't spend enough time trying to cultivate relationships like that. And bear with me because I'll get to the point I'm trying to make. I don't think about it in the classic mentor-mentee relationship, right? Like I feel as though that's a little bit too much give and take in a one-way relationship. Like my mentors, if you think about a mentor, like the traditional one is somebody, to your point, who is older than you, and who can provide advice. I mean, I think my mentors are actually my age. I think I've kind of found a nice circle of people who think differently than I do and who can provide advice. And so when I have problems, whether it's career or professional or personal rather, like I'll turn to those folks. And so I think it kind of breaks the mold of a traditional mentor-mentee relationship. But it works. It works for me.
Yeah, and I think that's actually the most important thing. Where practically the point of it is to elevate you, right? It's to help you grow into a completely better and different person every year, or even faster. Yeah. And so I think, I agree. I think it doesn't have to be someone older necessarily. One
of the things I do, and again, this is coming out of the MBA program, is a forum. So there are big organizations like YPO who do these things. I do one through a different one, and for the benefit of your listeners, like what these forums are is you get a group of people together who it's better if they're not close friends, kind of arm's length relationships, and once a month or however many times you decide per year, you get together and you can talk about personal and professional problems, best, worst. And what it ends up doing is it ends up being like a personal board of directors, right? And I'm sure that's an overused term, but anybody can do this, right? Anybody who's interested, as long as you have kind of at least, I would say, 8 people, can find time to make this happen, where you get together every month, and there are tons of materials online about how to do this, and you have these meetings, and they're 4 hours long, and everybody gets to. Usually it's everybody brings up their issues and you manage them and you triage them, and then there's usually 2 presentations where you go in depth, and there's no advice giving. Everybody listens and tries to relate to things. They relate to things that happened in their lives and provide that feedback to the person presenting. And so it's I found that to be very helpful.
No, I think that's actually extremely valuable. I think that's different, but I think that makes sense. Like having your personal board of directors in that manner. Like I actually recently wrote an article on how I make my own personal board of directors through podcasts. And I just, like I told you about how I listen to podcasts, where I just find one person I like and I just go gung-ho into every interview that person's made. That's generally how I've been rotating my board of directors constantly. But I will explore that forum method too. I think that's actually very fascinating. And the final kind of closing questions are, if your 20-year-old self were to look at you right now, your third year Greg in Queens, what do you think the emotional reaction would be by that 20-year-old self?
Surprise.
Okay.
And I think it goes back to something we talked about, which is priorities, right? I think my priorities as a 20-year-old person are very different than my priorities today. And in fact, I can remember thinking, my priorities will never change as a 20-year-old individual. And boy, was that naive. And so, look, I think things have gone well. Things have gone poorly. I mean, that is the way that life works. But at the end of the day, I think it's been a reasonably good ride so far. But again, it's the key things I think I would be focusing on are very different today than I thought they would be 10 years ago.
Mm-hmm. Yeah. And so what advice would you give to that 20-year-old self? Like, what advice would you have wanted to gotten in hindsight?
Yeah, I mean, it's funny, right? Like, people always get advice. Like, you always get advice at every point in your life, and I guess the key question is, like, what advice would you have actually wanted to pay attention to or be attuned to, right? Because I think you dismiss advice as quickly as you get it, and there's this is going to be very cliche, but there's this concept of just having an open mind and being willing to explore things. And I think I had a very closed mind. Like, I think as soon as I figured out I wanted to go into finance, like, it was only that. Like, there was nothing else. And we don't have time for it, but there are a lot of costs of having a singular focus in life, including the lack of awareness of what's happening around you. And I would say, I missed out on a lot of great things in my early 20s because of that. And so I think there's a real closed-mindedness about me, especially kind of 10 years ago, that I'd like to go back and change.
Mm-hmm. And I want to dig into that. But yeah, you're right. We were kind of closing down on the time. Maybe we'll have a part 2.
I'd love that.
I'd love
to be back.
Yeah, maybe I'll have you back next week. I don't know. We might just make this a long 2-hour series.
That's right.
But okay, no, great, Greg. Thanks for coming on the podcast. I really enjoyed our chat.
I've enjoyed it as well. It's been great.
Yeah, and I hope the audience got a lot out of it. And yeah, we'll probably have a part 2. I think we'll probably have a part 2 if your schedule permits. All right. Yeah. Thanks, Greg, for coming on.
Thanks, Dan.
Yeah. So thanks for listening to the podcast. If you enjoyed what you heard, please check out other episodes, and don't forget to subscribe to stay up to date for the future episodes. Also, I would really appreciate it if you would leave a review on iTunes, Google Play, or Stitcher, whichever is applicable to you. To see past episodes, you can go to oldmandan.com/podcasts. Also, you can sign up to my weekly newsletter on my blog, oldmandan.com/newsletter. You can stay up to date with future podcast episodes that way, and included in the newsletter are my book reviews I write, my weekly article related to the domain of self-development systems, as well as 7 things I learned throughout the week on being healthy, wealthy, and wise. Finally, special thanks to icons8.com for allowing me to use their music, Tiny People, on the podcast. Great. I will see you all next time. Take care.